Welcome back, traders. Happy to have you here today. In this video, I will show you how to use Elliott Wave LuxAlgo indicator to detect market trade opportunities. The Elliott Wave indicator allows users to automatically detect Elliott Wave (EW) impulses and corrective segments on the chart. These are detected and displayed serially, allowing users to keep track of the evolution of an impulse or corrective wave. Fibonacci retracements constructed from detailed impulse waves are also included. The script additionally allows users to get alerted on a wide variety of trigger conditions. To apply this indicator on the price chart, search the keywords Elliott Wave LuxAlgo. Select the EP version by LuxAlgo. Here's the technical indicator on our price chart. Before we further check how this indicator works, let's check its functionality settings. Under the input settings, there is the source, high to low. The high has the options a high, close, maximum of open, and close. The low has the options low, close, minimum of open, and close. Next is the zigzag. Under the zigzag section, there's the source and length are used to check whether a new pivot point is found. As we can see, there are three types of lengths. By default, the first length is 4 by default. The second length is 8 by default. The third length is 16 by default. Also, there are Fibonacci values of 4. The first level is 0.5. The second is 0.618. The third is 0.764. And the fourth is 0.854. That's all under the input values. The style section has boxes, labels, line fills, and lines. Enabling or disabling this will apply or remove these functions on the price chart. Now, how does the Elliott Wave LuxAlgo indicator work in the market? The source and length check whether a new pivot point is found. For example, if source equals high or low, and if length equals 10, then there is a new pivot high. If the previous high is higher than the current high, the highs of 10 bars prior to the previous high are all lower. These pivot points are used to form zigzag lines, which in their turn are used for pattern recognition, as we can see on this price chart. The basic principles we use to identify Elliott Wave impulses are: a movement in the direction of the trend, motive or impulse wave, is divided into 5 waves, wave 1 to 5. The corrective wave against the trend is divided into 3 waves, wave A to C. The waves can be subdivided into smaller waves. Wave 2 can't retrace more than the beginning of wave 1. Wave 4 does not overlap with the price territory of wave 1. Let's study the price chart here. As we can see on this price chart, after the price made the first impulsive bullish move as wave 1, there was another bearish corrective price swing in the opposite direction of wave 1. This can be tagged as wave 2. As you can see, for wave 2 to be valid, it must not go lower than the low of wave 1. If it does, then it has been voided. The price has proceeded upward and wave 3 has been erected. We can see how the wave 3 impulsive moves went further above the peak of the last point of wave 1. Also, take note that wave 3 cannot be the shortest wave of waves 1, 3, and 5. As we can see, now we have waves 1, 2, and 3 as our impulsive moves in this uptrend market. After the exhaustion of wave 3, there comes another corrective price move down. This time, the end of this wave moved closer to the high of wave 1. Take note, this wave end should not overlap with the price territory of wave 1. This corrective price move can be tagged as wave 4. And again, the bullish trend resumed its upward bullish impulsive move. Now, Wave 5 is carved. Wave 5 proceeded upward above the high of Wave 3. This is how to ride a bullish trend with the Elliott Wave LuxAlgo indicator. Now let's proceed to the reversal of a bullish trend into a bearish trend. After the last Wave 5 was erected, the price made another counter-trend move, which is the corrective move. Study how the peak of Wave 5 was unable to move farther than the peak of Wave 3. The peak of Wave 5 signaled weakness in bullish momentum. We can see how the price later formed the ABC wave count in the uptrend. This is the corrective wave against the trend and is divided into 3 waves, wave A to C. Later, a strong bearish swing move resulted in the uptrend and it closed below the low swing at A. To trade the reversal of an uptrend into a downtrend, patiently wait to see the weakness in the wave 5 in the uptrend. Next, look for wave formation within the interval of wave 5. This wave's interval within wave 5 is usually a choppy market that should be possible to be tagged ABC. A bearish close above the low of C will confirm the bearish trend. This massive bearish swing is the first impulsive move for the formation of a downtrend. Next, a corrective move occurred in the downtrend to form wave 2. Next, wave 3 went longer than wave 1. Another corrective wave occurred to be wave 4. The impulsive wave continued later to be wave 5. Wave 5 becomes shorter. This signals the weakness in the bearish momentum in the downtrend and that the bearish trend is about to be over. Again, we can see how the price later formed the ABC wave count in the downtrend. To trade the reversal of a downtrend into an uptrend, patiently wait to see the weakness in the wave 5 in the downtrend. Next, look for the wave formation within the interval of wave 5. The wave's interval within wave 5 is usually a choppy market that should be possible to be tagged ABC. A bullish close above the high of C will confirm the bullish trend. Make sure you practice this trading strategy on a demo account before applying it to trade on a live trading account. Also, ensure you implement proper risk money management when trading with this trading indicator.